Good morning. This is John Fallot with Senior Enrollment Solutions. You are tuned into week number 7 in regards to our Roadmap to Success Agent Training 2022. Today we're discussing health insurance, everything under 65 options, products, and offerings. I see a lot of people are still logging in. It is just about 10 o'clock. We'll get started here in just about a minute's time as we will begin all of our webinars promptly to respect your time. This webinar should last about an hour. Obviously, after the webinar, we'll be logged in for another hour's time answering any additional questions that you may have. If you do have additional questions, I'll shoot you over the email or you'll have that at the end of the PowerPoint slide. So welcome. It is 10 o'clock. We are going to begin. Once again, we're going to begin promptly to respect your time. For those of you logging in later or still logging in, or if you feel as though you're missing some slides, this will be recorded. We will put this on the Facebook or the YouTube page, probably on Facebook as well for that matter, to help other agents really understand that under 65 market. So without further ado, we are here at the 10 o'clock hour and we're going to begin. So once again, welcome to the week 7, 2022 Roadmap to Success training. Few things in regards to this training. Obviously, if you follow this training all the way through, I don't care what business you're in. Certainly, the first 6 have been on Business 101, business basics, do's and don'ts, understanding compensation, building your future, understanding how to run a business and some of the answers that you have to deal with on a daily basis. So recognize now we're going to start diving into more specific topics as we roll through the summer months. And today, obviously, we're discussing the under 65. We're going to review topics and bring you back to Sales 101. Keep it simple. Keep your knowledge on the high level. Continue to learn, continue to grow, but don't vomit your information or your knowledge onto a consumer. They don't wish to have it, and it's overwhelming to them. Obviously, once again, we're going to have additional time for Q&A. And if you do have any topics that you feel as though I've skimmed over, that you have additional questions, you can certainly put it in the chat box down below. You can email us. I'll provide you my personal email and phone number here shortly as well. So once again, welcome to week number 7 of this 22-week training process through 2022. There's a lot of issues going on, questions going on. And I do know that we've had several different conversations in regards to the recording of calls on the Medicare platform. We're not there yet. Give me a week and I'll answer every question you have in regards to CMS, recording of calls, recording of appointments, etc. Some of that is still being worked out through NAHU. If you don't know what I'm talking about, once again, stay tuned. I'll get you there in a week's time. Week 6, as an overview, we discussed knowing enough about a product line to gather basic information from a consumer. Find and utilize, refer clients to more knowledgeable individuals, create some kind of referral basis with a financial planner, a PNC agency, a Medicare agent that if you're on the final expense or the life side, vice versa, if you're a life agent, find a Medicare agent, refer that business back and forth, or obviously go to the SES referral page, enter them in, we'll take care of your clients and you can refer them that way as well. Implement additional products for your client retention and higher revenue. As we discussed, and we'll discuss again here in 3 or 4 weeks, the more products your client has, the more longevity they will have with you. You are their one and only agent. So if you're only selling one product to someone, a Medicare Advantage plan or a health plan, you're missing the boat. There are other products, dental, vision, hearing, critical illness, cancer policies, accident plans that you can bundle into the health. We'll get there in a second. But having multiple products that your clients are purchasing from you will increase that retention rate and obviously provide you higher revenue as you go through your career. Your homework for this last week. We're going to locate or begin to think through partnering up with referrals. We're going to know and utilize our back office support. Review carrier trainings. There are many carrier trainings coming out. Schedule a training. If you need help with a specific carrier or specific topic, reach out. For those of you that are SES agents, you can always see all of the trainings through the agent services calendar, which should be shared with you as well. Set aside 1 hour a week. That's all it takes. 1 hour a week over the course of a year is 52 hours. You should be able to learn within the next 6 months to a year's time who offers what product line. Are you already appointed to offer this product? For instance, if you already have an Aetna Med subcontract, know that you have the cancer, you have the home health, you have the dental and the vision, and all of that bundled into that one contract. So it doesn't necessarily require you taking additional certifications or contracting with multiple or additional carriers. There are a few that really kind of segregate out their health insurance and their short-term plans, but that is far and few between. Understanding your commission levels, beginning to track that. Learn how to enroll your clients online. So important. I cannot emphasize the importance of the digital piece, especially with COVID numbers increasing. Some states are still on lockdown. Some states, counties are still requiring masks. This isn't over. So if we do have a fourth wave and you are an agent that does bingo events or goes into skilled nursing facilities, Section 8 housing, etc., know that you may not be going in this AEP. So recognizing this and being able to pivot your business, but more importantly, enrolling these clients online will save you a ton of time. Make sure that your applications are submitted appropriately. Make sure that your consumers are approved in a timely fashion, but really get into that digital age if you have not begun to do so yet. A couple of questions we had from this last week. A financial planner stated they couldn't accept referral payments. Yes, it depends on what license they have. So oftentimes your Series 6 and 7, they're unable to accept a referral payment from you, and they just appreciate referring out their health or Medicare to you or to a licensed agent. Obviously, they're looking for a referral back, so keep that referral basis going. If they have a Series 63, then they can accept a referral payment. So that is certainly something as an agent to tread lightly with on your financial planners, but great question. A PNC agent stated they sold the same lines of business. Kind of. It depends on the PNC agency. Some of these PNC agencies, they do offer one Medicare line or one health line or one life line. And if that is the case, then yes, they wouldn't be able to recommend or to refer that particular product line to you. Most of the PNC agencies out there that I've met would love to dish off their health and Medicare to you. So it really depends on how that PNC agency is set up. Is it independent? Is it a captive agency? Do they offer life insurance as a line of business? And if they do, then obviously I wouldn't be discussing life insurance with them. I'd be discussing health or I'd be discussing Medicare with them. When are carriers hosting their specific trainings? Once again, this is on the SES carrier or the SES calendar for agent services. The carriers will be sending emails out to you for not only webinar sessions, but also face-to-face sessions. So if you have any questions on specific carriers, June, July, August, September, as we start rolling into this upcoming annual enrollment period, all of the carriers, as well as SES, will be hosting lunch and learns and webinars to increase your knowledge and to really understand that carrier's offerings. If you have questions, reach out, text us on the 24-hour text line, shoot us an email. We'll be happy to provide you specifics in regards to carrier trainings or upcoming trainings that they'll be having. Do agents typically pay referral fees? Great question. And what is a typical referral fee that's paid out? For years, I have been providing all of my referrals, either a Tim Hortons or a Wendy's gift card. One, if you're going to provide someone a referral, it needs to not be on a cash basis, right? It needs to be tracked. Secondly, it should only be up to a $10 or $15 amount On the Medicare side, they limit it to $15. Typically, a $10 gift card goes a very long way as a referral goes. But make sure when you're purchasing those gift cards that you understand what companies are in that consumer's area. I wouldn't purchase a Wendy's gift card or send one out to a consumer if they don't have a Wendy's within a 5 or 10 mile radius of their home, right? So really recognize where your consumers are living. Do a quick Google search, see what restaurants or locations are out in that area to provide them that $10 or $15 gift card, which is the typical referral amount. Is there a difference between a licensed agent and a consumer? Yes, there is. If you are a licensed agent, Medicare does limit the amount of a referral that we are able to pay out to you. $100 on an MAPD. I believe it's $25 on a PDP at this time. So if you're discussing an agent referral, very, very different than a consumer referral. So keep that in mind as well. I do enjoy the agent referrals. They're laydowns. And that's why we have a referral page for the agents that are offering coverage outside of the state or whatever the case may be, for you to be able to pass those referrals off to us. Or if you don't offer annuities or financial planning or life insurance, I don't care what the product line is, we'd be happy to assist your consumers and pay out that referral fee to you as an agent. If you have questions on what we pay out as referral fees on an agent basis, certainly reach out, or you can certainly go to the SES agent portal, and that's all listed under the referral page as well. So without further ado, let's begin. So health insurance, under 65, IMM, ACA, there's all these acronyms out there. Understand that during this last ACA open enrollment, so on health insurance, it's OEP, open enrollment period. It does almost mirror the Medicare annual enrollment period. So you have an AEP for the Medicare, you have an OEP on the health insurance. This last OEP, now that we have numbers for 2020, 80% of consumers intended to review their coverage options. Almost everyone during that OEP time period is going to want to review and make sure that their doctors are in network, that their medications are still covered, and that their policy is still affordable, or that there's nothing better out there for them. Half of the consumers out there who don't qualify for subsidies, they're not happy with their plan. And it's really important to understand this. Half the people out there that have an ACA plan, if you're not obtaining a subsidy, they're dissatisfied with it. And if you're the agent that sold it to them, you have a problem going on. They need to have a backup plan, and we'll discuss that here in a moment as well. Half of the monthly premium is most important, right? Obviously, affordability more than coverage is important for those that don't have any health issues or health risks that need to be attended. 68% are satisfied with their current plan. That number, although looking to appear fairly high, is still not a decent number. These consumers, once again, are wanting to reshop their coverage. So how do we obtain and move their insurance? We'll get to that in a second. 40% are likely to switch to a new plan. Half of them, all they need is a little guidance saying, hey, look, you could save $200 on your medications by moving from plan A to plan B. And that consumer is all over that move. Your consumers or yourself as an individual in the United States, you have 6 options. That's it. We're going to go through all 6 options. We're going to run out of time today because we have a lot to cover. So I am talking a little quickly. Once again, if you have any questions, throw them in the chat box. We'll answer them as we go through the webinar, or we'll reply back to you here shortly. So first and foremost, if someone leaves an employer, they're offered COBRA. If they're laid off, if they get a divorce, if their spouse passes, COBRA is 102% of their current premium. So if if the total premium is $100 and the employer's covering 50% of that, then obviously when that employee is employed, they're only paying $50 for health insurance. Once they leave, they're paying $102 for that policy. So oftentimes COBRA is very unaffordable. If that consumer does have health issues, it may be an avenue for them to have for up to 36 months. So typically, if you're laid off, if your job or your position ends, you get 1 year worth of COBRA. If you're in a divorce situation, you can get up to 3 years of COBRA. So keep that in mind in regards to your consumer situation. Second is the ACA, the Affordable Care Act. The Obamacare is what it's also called. You then have your non-ACA plans, which are similar to ACA, but they're not on the marketplace. So it gets a little confusing and convoluted. I'll straighten that out for you here in just a second's time. You then have your short-term plans, your faith-based plans, and then you also have your traveler's plan. So once again, we are going to be cutting time incredibly short this morning. We have a lot to go through on this particular presentation. So let's really dive in. So your health insurance plans. The Affordable Care Act was created March 23rd, 2010. Many refer to it as Obamacare or individual major medical policies. These plans are all guaranteed issued. There's no health questions asked. So what happened in 2010 is the government said anyone of any health can obtain any one of these plans, whether or not it's a platinum, a gold, a silver, a bronze, or a catastrophic plan. We're not going to ask any health questions. Well, the insurance carriers got wise to this. And so what they did was they limited the network on the inexpensive plans, the bronze and the catastrophic. The network on the silver, gold, and platinum plans are a larger network. It is a different network on those plans, so keep that in mind. But what the carriers did to be wise about all of this is if you were a consumer that had MS or bipolar or whatever the case may be, and you need more expensive costing medications, those aren't on the formulary. They're not on the covered drug list of the inexpensive plans, which then forces the consumer, although they're approved, right? Any plan, any carrier, although they're approved, it forces them into a more expensive policy in order to get their medications covered. So although anyone of any health can purchase any plan, it is very important to run their meds, to run their network, and to get them in to the healthcare.gov or to get them into a portal where you're able to really view the cost of their medications and help that consumer understand whether or not they're going to be covered. Consumers may be forced to purchase a more expensive plan, as mentioned, depending on the medications that they require. The ACA, the Affordable Care Act, consumers may qualify for lower premiums, lower copayments, lower maximum out-of-pockets on the silver plans only. And I need to emphasize this again to you. So although you can qualify for any policy, and we find you a plan, let's assume it's a silver plan or a gold plan that your doctors and hospitals are part of and that your prescription drugs are covered under, the government realizes that if you can't afford $1,000 a month premium, you probably can't afford the $7,800 max out of pocket that's on these policies for 2022. So how do they help you in the overall picture is that you receive a tax subsidy on your taxes when you get your taxes completed the following year. The government will either provide that monetary value to you when you get your taxes done, or they will shave off the cost of the premium. So it's all income dependent. I will tell you, working with the 62, 63, 64-year-olds, they may be wanting to retire, but they haven't budgeted in the cost of their health insurance, the cost of their medications, etc. So this becomes very important to help someone really plan for their retirement and see if it is something that's affordable for them. So if your income is low enough, the government will provide you a premium deduction. And if you choose a silver plan only, the government will lower your deductible, will lower your copayments, and will lower your risk. So for instance, I've seen health insurance policies as little as 48 cents a month. with a $100 deductible because that individual qualified financially Affordable Care Act. So it's affordable for most as long as you're in that income bracket. If you're not in that income bracket, then oftentimes the Affordable Care Act is not affordable for most consumers. So 90% of consumers out there typically choose the silver plans because many of them are balancing their income in order to qualify for a lower premium, better coverage. Silver plans only. To offer health insurance, the individual major medical IMM or the Affordable Care Act plans, you must A, have a health insurance license. B, you need to complete your CMS annual ACA training. It's through the CMS portal. If you need a link, we'd be happy to provide that to you. It typically takes about 20 minutes once you've done it once to rock through. Very little has changed on the ACA over the last 10 years, besides deductible amounts, besides very minor caveats to these plans. So that training, once again, once you take it the first time, once you dive into the healthcare.gov or you set up your own account just to play around and see what's available in your zip code or in your area, it's very quick to get through that CMS training, but it is a mandatory training that you must get through. Obviously, you must be contracted and appointed with that carrier. The health insurance contracts are different, from the Medicare contracts or the life insurance contracts that you may already have. So keep that in mind if you are planning on incorporating health insurance or adding that to your portfolio, that there are additional contracts that you'll need to get handled prior to offering that coverage. Obviously, you need to be licensed and appointed in the state that you're offering that coverage in. The government has created a website to show all available ACA plans. So basically like a mall, the government created a website. It's the healthcare.gov website. And just like a mall where you're able to enter one facility and shop, Macy's, Hudson's, JCPenney, Sears, I know I'm aging myself, but you're able to stay in that one facility and shop all of those stores. And basically, the Affordable Care Act and the healthcare.gov website allows the consumer to do the same thing. You can go in, you can enter your physicians, you can enter your medications, and healthcare.gov will show you that this plan accepts 2 out of 3 of your doctors. This plan accepts 4 out of 6 of your medications. So it's a great starting point to get into to A, see if the consumer qualifies for a subsidy, and B, to shop all the carriers as opposed to going from carrier site to carrier site. Automate the ACA process. There are skins, is what it's called. It appears and looks or feels similar to the Affordable Care Act or the healthcare.gov website. You can provide that skin, that PURL, that personal website to your consumer, which allows you to increase your social media. It allows for you to throw that into any email marketing campaign that you have going out. There are several different skins or companies that you can either purchase. Some are no cost. Health Sherpa is a great carrier, super easy to use. The Aca Express operates a little bit differently. It's more hands-off for the agent, but Aca Express is another link that you can provide to your consumer. Now, if you're using any kind of skin, and if you're an agent that operates in multiple states, it is crucial that you go in to that carrier site and you set up the carriers that you're appointed with. So that way, when the consumer logs in or doesn't log in, but clicks on your link, that they're only able to purchase either the carriers that you offer, or you get contracted and you get set up with the carriers that you may not have in that other state. So in the event a consumer purchases that health insurance policy through a skin, that you actually get compensated for it. So that is the tricky part in setting up these additional websites or carriers, to make sure that you are getting compensated and that these carriers aren't internally sucking up that business for you or from you. Non-ACA plans. So we're on the third of six. You have your COBRA, you have your ACA plans, right, through the marketplace. Now we're discussing your non-ACA plans. There are several carriers that offer non-ACA. For instance, here in Michigan, Health Alliance Plan, HAP, does not offer an ACA style plan. They only offer non-ACA style plans. So you won't see some of these carriers through the healthcare.gov. They chose not to be part of the mall. They're just a standalone building in the parking lot. So if that is a carrier that your consumer brings up, you need to know how to be able to go in and find the rates and run the rates for these non-ACA plans. Now, why would a consumer want a non-ACA plan? Well, A, they're slightly less expensive. They still hold the same similar coverage options. They're still the bronze, silver, gold, and platinum. As I mentioned, they're not on the marketplace. For whatever reason, that carrier didn't want to participate in the Affordable Care Act. They are non-qualified plans is what it's called. So the federal government has set up minimum expectations of coverage for these carriers to offer. If you're not wanting to abide by the federal government's minimum threshold of coverage, that's when the ACA plan, non-ACA plans come into play. So they are non-qualified health plans. They may be ideal for those who are generally healthy and don't see a doctor on a regular basis because they are set up slightly differently. That is a great avenue to help your consumers save or shave off some premium dollars, but take on perhaps a little bit more risk that once again may be a higher risk factor than what the federal government states in order to be a qualified plan that you have to have. Very few agents write too much non-ACA style plans unless you are specifically offering that one carrier all the time. Most consumers purchase ACA or Affordable Care Act, Obamacare style policies. Short-term plans. Number 4, a short-term plan is far less expensive than an ACA plan. So let me just throw out some numbers for you. So for a 60-year-old female on an ACA plan, you're discussing a premium of around $600 to $650 a month. That $650 per month policy will provide that individual a $7,800 max out of pocket, super high deductible. We're probably talking a $2,500 deductible, and then your co-insurance 70/30, or on a silver plan, it's 80/20 thereafter. If someone doesn't qualify financially for an Affordable Care Act plan, it may be an option for them to purchase a short-term plan. Most states offer a 6-month option. Is the income based as an individual or family based? Both. It depends on the level of your family. Great question, Aaron. So I'll go back to that slide, or I'll shoot it over to you off the webinar. But yes, if you're one person, it's one income. You add a spouse, a child, a child, a child, a child, a child, your income level continues to go up to allow for you to qualify for that silver plan or that lower costing ACA policy, whether or not it's a bronze, silver, gold, whatever that consumer chooses. But that income is based on family size or how many individuals will be enrolling into that. I shouldn't even say that. It doesn't depend on the individuals enrolling into the plan, as some children may be on Medicaid, or they may be covered under an ex's policy that still counts towards your total household. So let's get that clear. So if it's just you and a spouse, it's a second marriage, your 4 children are under the previous spouse, that still constitutes as 6 individuals in your house. Most states have a 6-month option. So with a short-term plan, you may only purchase a policy for up to 6 months' time. There are a few states that allow for you to stack those policies. And what I mean by stacking is short-term policies are underwritten. You have to be approved for that short-term policy. So that makes it very, very different than the ACA policy, where anyone can purchase that plan. However, we have to talk about lockout periods for a second. The ACA, you're only allowed to purchase coverage from November 15th until January 1st, typically. So with that time period, if you don't purchase your ACA plan during that time, you'll be locked out and unable to purchase an ACA policy until that next open enrollment period. Unless you have a divorce, you lose your job, you have a child, etc. But most consumers are locked in. With short-term plans, you are locked in, if you will, to that 6-month period. But when that 6-month period expires, you're going to need to be underwritten again to purchase another 6 months worth of coverage to finalize that year, or to get you to the next open enrollment period, allowing for you to purchase an ACA plan. So by stacking policies, what that means or refers to is that I can write you on 2 short-term plans, 6 months and 6 months, get you approved on both policies now. And regardless of your health, in 6 months' time, we know that you're already approved for the next policy. So some states allow for you to stack policies. There are carriers, Pivot Health, for instance, has a bridge to Medicare policy that can be up to 3 years' time. Stack, 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 stack. Here in Michigan, where most agents, I believe, are on the webinar at this moment in time, it is a 6-month period. So you can purchase 2 different 6-month options. Now, as a caveat to this, if you sell someone, maybe you're helping someone during the open enrollment period, and they're saying, oh my gosh, John, I can't afford this $1,200 a month anymore. This is absurd. Are there any other options? Yes, we can look at a short-term plan, and that 60-year-old individual, instead of being $600 a month, a short-term plan would be closer to $250 a month. And on a short-term plan, you can lower that deductible down to $1,000 if you so choose. I'll get to why we were not going to do that here in a moment. We should be looking at a $2,500 or a $5,000 deductible to make sure it's affordable for that individual. And then bundling on an accident plan, a critical illness policy, a cancer policy onto that insurance policy. So for instance, on most short-term plans that I offer, I'm going to try to persuade you into a $5,000 deductible, still 50% less than the ACA, and I'm going to bundle that with a $5,000 accident plan. So I know, and you know, if any accident occurs at all, you basically have a 100% coverage plan. And this is perfect for the younger, healthier individuals out there that are steering away from the Affordable Care Act, because unfortunately for one individual, it's very hard to get your income base low enough to qualify for that subsidy. So on the short-term plans, back to stacking, if you write someone in December for a January 1st effective date, and they come down with cancer in April, they're going to be in a pickle, because they're going to have to be underwritten for the next short-term plan to begin in June. And now they have a pre-existing condition. And now they're locked out of the time period that they can apply for the Affordable Care Act or an ACA style plan. So a lot of individuals purchase an ACA plan, run with it January to June, and then purchase a short-term plan to get them to the end of the year, and they save the money on the short-term plan. Obviously, if they're not putting any money towards the deductible, if they haven't satisfied their max out of pocket, then it may make sense for them. For the healthier, younger population, you can once again stack, say, a United Health policy from January to June, and then a Priority Health or a Pivot Health or whomever, Standard Life from June until the end of the year. So depending on the state that you're in, will be dependent upon the short-term plans that are available. But tread lightly on these policies because they are underwritten. So once again, many consumers decide to drop that ACA June 1st, purchase that short-term plan through the remainder of the year, because they haven't paid any money out towards deductible or out-of-pocket costs, and they're just tired of spending $1,600 a month for this family of four to have this ACA style policy. So there are many short-term plans out there. Just keep in mind 6 months max, and that some states allow stacking. Michigan does not. Once again, these plans are all underwritten. They do have a pre-existing condition clause. And so you also need to watch that. If Harold is taking blood pressure medication and you put him on a short-term plan and 90 days later he has a heart attack, they may not cover that heart attack because he's already on a high blood pressure medication, and that may be a pre-existing clause in their eyes. Typically, this is for consumers that are needing 1 year of coverage or less. I do have clients that have played the short-term game for 5, 6, 7 years, that every 6 months their short-term policy ends, they purchase a new one, they're healthy, they're not concerned about it. They feel as though that, if something major does occur, that Medicaid's going to step in and help them on the financial side. Whether or not that's true or not, that's obviously their own thought process. Some plans offer the Medicare Bridge Plan, Pivot Health specifically, up for 3 years' time. And it's the fastest route to having some level of coverage immediately. These are not ACA compliant, but can provide protection from a catastrophic medical expense. So something is better than nothing. And oftentimes, conversing with the younger adult population, those that are in their early 20s, having the $60 health policy and at least having a $5,000 max out of pocket, maybe even looking at an HSA style plan where you're paying the entire amount up to that deductible and then you're covered at 100% thereafter, something to drive this cost down, but yet protect that individual's financial future, that they're not having to file bankruptcy at 22 because they tore their ACL, right? So life happens, but there are so many avenues to be able to assist a consumer and keep that cost down, even if they don't qualify for the subsidy through the ACA. Plans can be purchased anytime throughout the year. So I literally could have coverage starting tomorrow. It would begin midnight tonight for a consumer. Obviously, if they've broken their finger, they walk into our office, that's a pre-existing condition, right? It wouldn't be covered on these short-term plans. So that pre-existing condition is still a huge part of all of this, even though the ACA came out a decade ago. If you're underwritten and approved, you could have coverage in force tomorrow. So if that is a concern to the consumer, that, wow, I just lost my job, or I didn't know that my insurance expired, or my ex-husband was paying the premium and apparently they didn't any longer, and I need insurance immediately because I feel vulnerable or I feel naked running through being a US citizen without having any insurance. The appealing to consumers who are planning to buy ACA compliant coverage, but who face waiting days or weeks or even months before that coverage takes effect. So most of your ACA plans will begin the first of the following month. If a consumer does need a short-term plan, even for 10 days, these are viable options for them. Or maybe we push off the ACA starting for a month or two and run with a short-term plan for the next 60 days and try and save some funding if the prescription drugs are affordable, if the prescription drugs are covered, if their primary care is in network in the event of. There are some things that we have to take into account when we're offering health insurance to make sure that that consumer is taken care of appropriately. Faith-based plans. These are not insurance. Keep that in mind. They will never be called insurance because they're not an insurance policy. What's the difference? If you're purchasing an ACA plan, you're telling the carrier, I'm willing to spend $600 a month for this insurance, but I'm only going to pay up to $7,800, and you guys have the rest of this cancer bill or this heart attack bill taken care of. I know as a consumer the amount of money that I'm at risk or I'm on the hook for by having this style of insurance policy. With a faith-based plan, they're going to tell you, not you tell them, they're going to tell you how much they are willing to cover. So they're willing, for instance, to cover $800 a day every day that you're in the hospital for room and board. You don't know as a consumer that hospital A charges $790 a day and hospital B charges $1,100 a day, because unfortunately that's not disclosed information to you. So if you chose to go to hospital B, you may have some out-of-pocket costs in the amount of $300 a day. If you go to hospital A, that policy will cover the entire amount. So it's crucial as a consumer that you understand how to explain these faith-based plans and what the caveats are with these faith-based plans, because they're not classified as insurance. Insurance has a deductible. None of these plans have a deductible. They don't call it a deductible. They call it a matching. They match, you match, etc. There's no underwriting on any of these plans, but they do have pre-existing conditions. So if you run into a situation where someone's on a short-term plan and they don't qualify for another short-term plan, this is a viable option for them, but typically they wouldn't qualify for another short-term plan because they failed underwriting. And by failing underwriting, why even put them in a faith-based plan? Because their pre-existing is not covered for 2 years anyway, and they're going to be pissed at you. There are many companies that offer these style plans. It was interesting, about a month and a half ago, I believe, on Last Week Tonight, John Oliver went through some of these companies and how I wouldn't put a loved one in some of these faith-based plans. There are dozens of them out there. Some are stricter regarding religion than others. Some want to see documentation that you've been baptized. Some want to see your faith. These are faith-based plans. The way that they get away with it is it's on a religious platform. Some are strict, some are not. Understand who you're going to be offering this plan to, or this carrier to a consumer. Instead of a consumer telling you once again what they're willing to pay, the carrier will set limits on everything. How much they're willing to cover for a doctor's visit, $65. If your physician charges $100, you're paying $35. It's not a copayment. There are no copayments or deductibles on these plans. It's just the allotment of what they're willing to cover for you. Huge, huge difference. There is no max out of pocket. There is no high level protection to your consumer if something major happens to them. If they come down with cancer, there's not this, I pay $7,800, you pay $2 million. That consumer is going to be shelling out a lot of money, because unfortunately that faith-based plan may either have a caveat or a limit on how much they're willing to pay for radiation, chemotherapy, etc. And in turn, you're going to be responsible for the difference as a consumer. And what that difference is, unfortunately, no one discloses how much your doctor charges, how much chemotherapy costs at facility A compared to facility B. So recognize that as you are treading lightly on these faith-based plans. I would prefer that you stay clear of most of them. Lastly, traveler's insurance. It's not just traveler's insurance anymore. There are traveler's policies for clients that are not U.S. citizens and don't qualify for health care or Medicare. These are non-residents traveling to the United States. My mother lives in Jamaica. I just had a baby. This is all just fictitious storytelling, right? My mother lives in Jamaica. I just had a baby. My mother's coming up here for 5 months to help me take care of this infant. Is there something you can help me with? Well, because she doesn't have a social security number, because she's on a green card or a visa of some kind, she's unable to purchase most of these short-term plans or ACA style plans. So that's when a traveler's policy would come into play. These are comprehensive benefit medical coverage plans that include COVID-19 coverage, because that's been a topic lately, or you're going to be purchasing a scheduled benefit medical coverage plan. Two different styles of insurance. The comprehensive, once again, you're telling the insurance carrier, for this $150 a month, I want to have a deductible, and I want to know how much I'm having to be responsible for in the event that I actually need to use my insurance. With a scheduled benefit medical coverage, they're telling you, we're going to pay up to $100,000. After that, the bills are your responsibility. If that's a concern, increase your premium, increase the plan to have a $500,000 or $1 million coverage option. The premium obviously will be dictated by the level of coverage on these scheduled benefit medical plans that these travelers insurance policies are offering to you. So for one, if someone's traveling into the United States, great option for them. Typically, we're looking at less than a 6-month time period. That's generally how long a visa or a green card would last them anyway. If your consumer's traveling out of the United States, oftentimes their health insurance isn't going to cover them. Medicare only covers up to $50,000 at an 80-20 ratio. You do the math. So these travelers insurance policies for your consumers who are thinking of taking a cruise or thinking of traveling to Germany or wanting to take that trip to Italy or whatever the case may be, these are great add-ons to talk to your consumer about. The commissions on travelers policies are next to nothing. They're not even worth really talking about or writing home. But this is a value-added benefit that you're offering or bringing up to your consumer. If they're mentioning at all that they're traveling outside of the United States, it should be something that they should be considering. Now, oftentimes with these traveler plans, it goes by levels, right? You can have your baggage and hotel and airplane, right? If you're delayed or you miss your flight, covered. And then it goes into the health insurance thereafter. So keep in mind that these plans become very, very detailed on the level of coverage that they're offering. They begin with travelers insurance being your trip itself, and then they go into the health insurance side, providing you the flight for life. If you're hiking on the Great Wall of China and you tear your ACL, they're going to come air chopper you off the wall of China and get you to a reputable facility or get you stabilized and bring you home. That's a huge concern to some of these consumers that are traveling to lower income areas, right? If you're taking a trip to Panama, you may be concerned about their health care and what your level of care would be in the event that you're actually hospitalized. Short-term coverage to bridge the gap for a passport, for citizenship, or visiting to and from a foreign country. I do have clients that purchase travelers insurance even when they remain in the United States. And this may be a viable option for someone for a month or two if they're relatively healthy to bridge the gap and not look at a short-term or a faith-based plan, but to get them enrolled into a traveler's insurance policy, knowing that they're only needing it for 60 days. It may provide them a higher level of coverage in certain areas that they may need compared to a short-term plan. These are not underwritten style policies, which makes life even easier that the consumer can literally just click on a link and go in and enroll themselves into that policy as a whole. If you have questions about referrals, if you don't wish to offer health insurance, or you're a new health insurance agent tuned in and you don't wish to offer annuities or life insurance, final expense, whatever it may be, if you have a consumer that has questions, just simply reply to them, hey, Joyce, that was a great question. Let me get some homework done. Reach out to SES. I assure you we'll have the answers for you. As long as you gather enough information, we'll be able to help guide you down the right path of health insurance and how to assist that consumer. If you don't wish to deal with that consumer and you just want us to take care of it for you and pay you a referral fee, there is the referral tab, once again, right on the SES agent portal, to be able to assist you with any referrals that are either out of state or a product that you just simply are not well versed in, you're not certified with, you're not appointed with, you may not have your life insurance license or whatever the case may be. To review, guess I confused you. There are 6 styles of health insurance. I left the COBRA off this slide because obviously we're not selling COBRA to anyone. With broad ranges of coverage, costs, and options. Learn the basics, the income limits. I would have that printed off and on my wall on November 14th or on my computer to know what those limits are, to help the client's children, to help their loved ones, to help ex-employers. There are so many individuals that have questions on the health insurance platform that if you are just a little versed with these 5 different styles of health insurance, and hopefully after this morning you are, that you're able to dig a little bit. Is it affordable? Does it cover your meds? Are you 100% satisfied with that plan? And we'll go into closing, stalls, and objections as we enter July, I believe. But just being able to help guide someone, hey, mom, I know your health insurance is really unaffordable. You're aging into Medicare soon. Have you thought about a short-term plan? Can we talk about what that is and maybe save you $5,000 or $6,000 over the next 6 months' time? Learn the basics. Learn the income limits. So important. Reviewing and recertifying for your ACA products will increase your portfolio and provide additional lines of conversation that you can have with these consumers. I haven't run the numbers, and I may before AAP begins, but there is a huge percentage of the population that one of the spouses is wanting to retire at 65. They've had enough. They're wanting to go enjoy their golden years, but their spouse is 62 and needs health insurance. Do not leave that spouse out in the cold. The one turning 65 is the easy one, right? They're aging in, no health questions asked, super easy to write that Medicare Advantage or MedSup policy. Dive into the spouse first. It will solidify that sale for you. It will build trust on the Medicare side as well, but get the difficult moving parts taken care of first so that individual that's turning 65 can really make the decision, can I afford this for the next 3 years? With my wife having MS, can we play with our income? Can I withdraw more out of my 401k this year and pay a penalty, and next year have a lower income so that way we're paying less out in healthcare? And that's certainly a viable option as well, that 1 year you take more income, the next year you take less income, and you have crappy insurance 1 year and amazing insurance the next. While you have that amazing insurance, purchase 90 days medication to start your next year off strong, right? There's ways of playing this game with your clients. But understanding how to play this game is crucially important to help those consumers that are 60 to 65, many of whom will not qualify for the ACA. They made too much money the prior year. They're working half this year. They have too much retirement, right? You're making $1,800 on his Social Security, $2,400 on her Social Security. You get a $2,000 check for retirement through your previous employer, or you're drawing off of an IRA or an annuity. And at that point in time, your income is well above that threshold because there's only 2 of you. So how are you going to afford her MS meds? How are you going to afford that chemotherapy? Or how are you going to afford that $8,000 max out of pocket and another $8,000 in medication costs and the $8,000 in premium? Can you afford this $24,000 a year for the next 4 years, $100,000 in total, Or would it behoove of you just to work another couple years? These are very important conversations to have with these consumers. And I'm not trying to talk anyone into working longer than what they would like, but this is a very important topic to be able to make sure that financially we're able to set this consumer up for the rest of their life and not drain their retirement because physically or mentally they're just simply unable to work that position any longer. Oops. Your homework for this upcoming week. Know enough of the differences with health insurance options and where to send your clients. If you're contracted with certain carriers, you already may have ACA contracts in place. So reach out, let us know what questions you may have, get into the healthcare.gov portal, run some zip codes, see what carriers are offering coverage, and reach out to us if you need to get contracted long before November 1st or 15th hits. Review your product lines and schedule time for CMS certifications for this upcoming OEP. I need you to set aside 30 minutes sometime in the month of August or September or maybe October, preferably not, but August, September. CMS will send out an initiative or an email letting you know that the CMS certifications are up. If you need the dates, please reach out to us. They have not launched the date yet. They have the AHIP, right? June 24th it's launching, but CMS on the ACA side has not released those dates yet. And then obviously contract with the carriers that you may be offering in that area if you're not already contracted. So you may, for instance, already have a United Health contract. The ACA is totally different. You may already have a Centene or a WellCare contract, but AM Better is totally different. Here in Michigan, you're realistically looking at your Priority Health for short-term, your National General short-term, Pivot Health short-term. If you need a list, I'll provide it to you, or it's on the carrier SES list, and then United Health. So you have United Health, Pivot, NatGen, and then Priority Health as your main short-term policies. For your main ACA policies, obviously we're discussing your Blue Cross Blue Shields, your Priority Healths, your AM Betters. It's pretty much the big three here in Michigan. Other states have different Anthem plans, etc. Still Blue Cross Blue Shield. So I know that we are pretty much right on time. So I appreciate you all tuning in to week number 7 of this 22-week in 2022 training. We will be diving deep into, I believe, final expense and life insurance this upcoming week. And then product by product, we'll continue to eat away into July. And then from there, obviously, marketing, how to market, etc. So before anyone hops on this chat or blows up my phone, we will be getting into that May 9th ruling that CMS has regarding recording of appointments and recording of calls within the next week to 2. We will set you up for success on this, but the final ruling has not been made, and I'll provide you rulings. We'll have all of this obviously on the SES portal here shortly as well, but we will dive into that training to make sure that as we get into Medicare, that you remain completely CMS compliant and that you're protecting your ass in the event you have that complaint with that consumer. So stay tuned. Much more to come in regards to training, in regards to the telephonic ruling, as well as the face-to-face ruling, where you have to begin recording all of your calls within the first 60 seconds, etc. Once again, the ruling has not been made. This is really a call center style rule that they've come out with. There is talk about separating out the call center agents compared to the belly-to-belly or face-to-face agents. Much more to come. So hang tight on that thought process and those concerns. If you need anything, the SES text line is available 24/7 for you. You obviously have the agent services line. You have our email. Obviously, my email is John, John, at seniorenrollmentsolutions.com. You also have the agent portal. You have the consumer site, and you have hundreds of videos on the YouTube SES Agents or the Senior Enrollment Solutions YouTube channel. 2 separate YouTube channels, one for consumer, one for agents. If you have questions, certainly hop on those YouTube videos. There's just a ton of knowledge on there to assist you. Hopefully this has been at least a beginning part to your health insurance knowledge, knowing what the options are, knowing what's underwritten, and how to navigate through that ACA is so, so important as we move through and begin to prepare for this OEP, this open enrollment period, and not confusing the OEP with the AEP. Thank you all for tuning in. This upcoming week, we will be off May 27th because of the holiday. So enjoy your holiday, and I'll look forward to seeing you all in 2 weeks' time.